Good morning everyone, welcome to ALA's Friday Community Scheme Training, part number 6. Today we're going to be looking at Prescribed Management Rule 26, Financial Records, Budgets, Reports and Audits. It is one of the longest management rules, so we will be doing part 1 today, and then continuing with part 2, 3, 4, 5 of the rule next week. Rule 26 in brackets 1, a body corporate must keep proper books of account. That 1, record all its income, expenditure, assets and liabilities. 2, disclose all amounts recovered from members by the body corporate or any managing agent or other service provider acting on its behalf. 3, include individual accounts for each member. And 4, contain all other information necessary to allow members to assess the body corporate's financial situation and their financial situation in regards to the body corporate. The second item the body corporate must keep is separate books of accounts and bank accounts for its administrative and reserve funds referred to in sections 3(1)(a) and (b) of the Act. So we see here the reserve fund has got to have a separate bank account and separate books of account, as well as a separate budget, which we know from Management Rule 17. So the reserve fund is almost kept entirely separate with its own bank account. The third item the body corporate must do, C, is prepare annual financial statements for presentation at the annual general meeting, which statements must include analyses of the 1, amounts due to the body corporate in respect of contributions, special contributions and other charges classified by member and the periods for which such amounts were owed. So once a year the body corporate prepares annual financial statements. They present them at the annual general meeting, and they've got to include amounts due to the body corporate for levies, as well as special levies and all other charges classified by member. So the annual financial statements have to actually have a breakdown showing what each member owes to the body corporate and the periods that these amounts are owed for. That's quite interesting. Number 2, the annual financial statements also have to include amounts due by the body corporate to its creditors, generally and prominently disclosing amounts due to any public authority, local municipality or other entity for services, including without limitation water, electricity, gas, sewage and refuse removal, classified by creditor, and the periods for which such amounts were owed. So all creditors are listed separately in the financial statements with the amount that's owed and the period that the money is owed for. They must also show 3, amounts advanced to the body corporate by way of levy finance, a loan in terms of a guarantee, insurance policy or otherwise, of the body corporate and the amounts paid by the body corporate and by any member in terms of such arrangement. So if the body corporate has gone and obtained levy finance, that means a loan on security of the levy book or just a general loan from any institution, then those amounts and any amounts paid back in respect of those loans must also be shown in the financial statements. Number 4, the financial statements must also show amounts in the reserve fund, showing the amount available for maintenance, repair and replacement of each major capital item as a percentage of the accrued estimated cost and the rand value of any shortfall. We're not going to delve into this now. This is an auditing discussion and we may have a separate talk on this. but the financials must show the amounts in the reserve fund available for the maintenance, repair and replacement plan and for the major capital items referred to in that plan. 2 more to go. They must also show the premiums and any other amounts paid and payments received by the body corporate and any member in terms of the insurance policies of the body corporate and the expiry dates of each policy. We know the body corporate has to have at least 3 different types of insurance, so the financial statements have to show the premiums, the amounts paid and the amounts received by the body corporate and also by any member from the insurance policies, as well as the expiry dates of each policy. So that is also all set out in the financial statements. Then the last item that the financial statements must show is amounts due and payable to the Community Schemes Umbud Service. We know from the CSOS Act that the maximum amount that each unit pays to the Umbud Service is 40 Rand per month, and that's collected quarterly by the body corporate, or rather paid over quarterly by the body corporate to the Umbud's office. So the financial statements have to show the amounts that are due to the Umbud's office. So we see from this rule that the financial statements have to really record a whole lot of information, be it insurance information, Umbud's information, reserve fund information, loan information and debtors and creditors information. So if the complex has a comprehensive set of financial statements, there's quite a lot you can tell from the complex from the financial statements. Subrule D, the body corporate also must prepare a maintenance, repair and replacement plan in accordance with Rule 22 for presentation at the annual general meeting. That is just a recap of Rule 22, which we dealt with already. All it's adding is that it must be presented at every annual general meeting, every year of the complex. Subrule E, the body corporate must also prepare budgets for the administrative and the reserve fund, comprising itemized estimates of the anticipated income and expenses during the next financial year for presentation at the annual general meeting, provided that such budgets may include discounts not exceeding 10% of a member's annual contributions, applicable if all those contributions are paid on or before the due dates. So again, we see from this rule that the body corporate has to have a separate budget for the administrative and reserve fund. Basically on the budget is just a list of expenses for the upcoming year for each of those funds. And very interestingly, this is a new addition to the legislation. A discount can actually be afforded to an owner in a complex. It can't exceed 10% of his annual contributions if those contributions are paid on a certain date, and that would go in the budget. So when the budget's approved at the annual general meeting, the budget will contain a proviso that if any owner pays all of his levies for the whole year before a certain date, that could for example be 30 days after the AGM, then he can have a discount of up to 10% on the levies. That's quite interesting. We'll end off with Subrule F. The body corporate must also prepare a report adopted by the trustees reviewing the affairs of the body corporate during the financial year for presentation at the annual general meeting. So a report is prepared summarizing the body corporate's affairs during the financial year for presentation at the annual general meeting. So that is just a little bit of Rule 26 dealing with financial records of the body corporate. Next week we'll continue with the second half of that rule. If you have any questions, feel free to contact me on inquiries at alattorneys.co.za or 011 326 8050. Please subscribe to our YouTube channel by clicking on the bell icon, and don't miss any videos uploaded. Have a great weekend.